Okay, it's been a little bit. Well, let's take a look at the markets, and I'll explain a little bit maybe what I've been trying to do. What I was trying to do the last couple of weeks, I suppose, going back into the start of February, was get long natural gas. I figured it was in such a poor state that it was time to start getting long. And it bounced and jiggled around inside this resistance area, and I caught some long and I caught some short, but in the end it was more money than it was worth. It didn't help that I had a bit of a holiday, so I was off work, and obviously when you have time off work you start in your head to imagine, well, if only this could last forever. And yeah, there was the classic, I think, over hopefulness, over leveraging going on a little bit. But in any case, we came lower, down to 2221. Big divergence, and we've come back into the mid range here. So that was fun. Here we are on the daily. It's even more pronounced. I guess you'd want to see it above, holding above 2-4. Anyway, what am I doing otherwise with myself? Well, I'm long oil, I'm long crude. I think once we get back above this line, 77, 76, that should provide for a bit more sustained upside. Take these highs here, challenge this price congestion area up here, come up to 90, come up to 95. Is my thesis. Is my thesis basically that I'm operating on. You can see we found support here. Not quite divergences because it's not a lower low and higher highs on the indicator, but we've crossed over. This is a very good reaction, and we retested into this candle body and it got eaten up. It got eaten up all the way above this key pivot here. So we want to see it stay above 75.50 on the daily, in my opinion, for American crude. Pull this down on the weekly. Whoa, not like that. Not like that. Not like that. Easiest to reset. There we go. But I've got to stretch out these indicator windows again. Yes, you can see that it looks like we were putting in a head and shoulders. It was all looking a bit bad. Left shoulder, head, right shoulder. We came down to the neckline. We came down to the neckline again. We got eaten back up again above that 75.50 level. And that's where we want to see it stay. We want to see it stay above 75.50. Otherwise it will be a case of retesting the neckline break, and then rump down maybe to 60, something like that. And we want to avoid that because it's better to be going long than waiting for things to dump, trying to short, and then trying to get long later on. It's always nicer when things just go straight up, nice and quick. Fat chance, I know, fat chance. But it's looking more positive than it was. We've still got to be aware, again, this sort of head and shoulders formation. But the daily looks good, the 4-hourly looks good, the hourly looks good. Going down on these time frames, going lower on these time frames, does provide some support for it looking good. And we see positive divergence coming in, positive divergence coming in. This was a higher low. Here's the left shoulder momentum, the head, the right shoulder, but we've crossed over the 14. Not in price, but in momentum. Go back on the monthly. You can see we're still poking into this whole sort of vaguely defined backtesting area. And fair enough, the monthly still doesn't look good. But the monthly, I mean, if one were to take the negative view of this, one would think, well, we're coming down back to, well, lower than 60. I mean, 60, but then maybe 50. Then maybe, I mean, if this is going to waterfall down, it looks gushy. Then you're looking at 40, 50, 60, or 60, 50, 40 rather, in turn. Unless the backtesting turns into a positive move in price, and well, positive who? Positive in terms of upside. Obviously, I'm not how good it would be for the world to have $150 oil. I mean, again, for the first time since the financial crisis. Who remembers that? 2008, eh? I was in university. Ooh, a long time ago. in any case. Looking for some upside in crude. Supportive of that case, we've got crude against dollar CAD. It's got that head, left shoulder, right shoulder thing going on. We've come down to the neckline again. We've sort of ticked up. Momentum is not really giving us any clues. So yeah, not much there. But against oil company stocks, so against ExxonMobil, we've closed above the 14. We've been, the decline has slowed, and we've just popped above the 14. And momentum seems to be potentially changing direction. And against stocks, we crossed back over. We closed above the 14. Yeah, but stocks had a little bit of a rough day of their own. So let's take a look at stocks. Start the S&P 500. So yeah, I mean, overall, like the internals and the breadth measures are still more of the character of a bull market, experience a pullback than a bear market. But this arrow got drawn on here a few days ago, or excuse me, folks, can't stop yawning. A couple of weeks ago, no, last week, and anything under there basically to me indicated that if we failed at this level, which we did, it was sell time. Even though we'd put in these positive reversals here, we'd then not made new highs, and rolled over. Get rid of some of these lines. And there we are, there's the sort of more zoomed out daily picture. Now we come back into a key pivot here. This 966, that area you can see is actually a key kind of pivot area. We've reset on momentum here. We've reset on momentum on RSI. We're all the way back down here on momentum, back where we initiated the move, but we're a lot higher and we're at a sort of a pivot level in price. So I decided it was worth a go long. We look at the 6 hour. I mean, I was trying to buy at the end of the day and it was sort of jostling around up and down, up and down. I was getting in, getting stopped out, getting in, getting stopped out. But I'm in now, again. I don't have huge hopes for it. I mean, maybe we do need to come deeper. It's possible we go down further. That could be, there's your reversal. A negative reversal. So, NIAD, we're under the 14. Momentum has rolled over. It's negative. We're selling. No argument there. It's more or less moving with price. There's no signals really either way. Rinya, you can see after this bear market period here, when we weren't getting above 80, we held above 80, we chopped around above 80, and we pulled back to halfway, which is sort of the rooftop for a lot of these spikes and rallies in the bear market. Here's your bull market. You tend to get reversals between 50 and 60, or between 35 and like 15, I suppose, in extremis. But yeah, round here. So we could come down to 35, 40, 20 even. We'd want to see a pretty fast turnaround after that. But there's nothing to indicate yet that this is, you can see we've rolled over on momentum. A bear market. But it's all about balance. I mean, maybe you would say, because it's broadly still, until proven otherwise, we've got to say it's still broadly the character of a bull market. Would say, well, maybe 70% of my positions will be longs and 30% of my positions will be shorts, and we'll hedge it, but with a bias, not a 50-50 hedge, a biased hedge. NEHL is broken below zero though. That's bad. Unless this is just a little nip, just like a little dip, like it was back here, the last leg of the bull market here. And the opposite of that, in the bear market, we've got a little nip, a little dip above the zero line. This needs to be a little nip, a little dip below the zero line. We would need to see more or less immediate reversal in stocks. This is the Nasdaq here, ComQ. Over the next opening session, or the next couple of sessions, otherwise it will start to look bad. Now we've come back into this mid zone here on the percent of S&P stocks above their 50. We had a little bounce to the room, we've dunked down again. That's also not a great sign. We came to the halfway mark and all we managed was that little bounce. So it may be that we need to come deeper. If we let's take this thing out. It's 18 months. So here was the top in the bear market. Let's actually go to 2 years. Try and see what the typical look of in the bull market was. Yes, this whole run up here, you can. I mean, look at this. It was falling off a cliff here, and the market was just powering up. But, you know, we were above the 50. We were above halfway. We got a pullback here, 25. The pullback here ended 35. The pullback ended here, 50. So 50, 35, 30, 30, 25. But then we're in the bear market. But same kind of area. You see that switch. We started topping out at 75 and bottoming out at 5. And then here we've got that big power move up, head and shoulders. We did make it higher to 90, and then the next low look was a lot less dramatic. And then we started putting in divergences and we reversed up, so then we hit the 90 level a second time. Big divergence on this top, big divergence on this top, and now we've rolled over a bit. So yeah, a sort of intermediate look to it. I mean, I'm sure there's wavists out there counting 1, 2, 3, 4, 5, or, you know, this is the 1, 2, and now we're going to go 3 down. I mean, anything's possible. I would still be more biased long. If we lost that pivot I was talking about, 39.66, then that would shift. You know, maybe you'd go 50% long, 50% short, makes a pure hedge. And then if things continue to deteriorate, you'd just change your bias short. Uranium, I mean, this was interesting because we moved up here, we put in a big positive reversal, but then it was the rollover. It was a left head, right shoulder, and we consolidated under this pivot here, this key pivot, and we just rolled over and collapsed. And all the commodities nutters, all the uranium nutters were saying, I mean, it looks like a fantastic bull flag, doesn't it? But they were all saying, this is the big one. Like with silver, you've been hearing it for the last, well, I mean, some of these people, you know, they've got all very nice complicated charts and they're saying, master technical analysis. But then, well, they've been wrong for like 5 years. I've been wrong for 5 years, but not on bold macro calls. I've just been wrong because I get overexcited about the possibility of freedom and over leverage myself, but I know that. So I moved basically back above this this white area here. I moved back above, what's that, like 2150, 2160 would, you could say, okay, maybe this time it's setting off for the big uranium rally to the heavens, to the stars. Until then, it doesn't look good. It doesn't look good. Here's tech stocks. You can see we've had this sort of top band, bottom band, middle band, and we came and chopped around the middle band for a bit, got our divergences in, broke our trend lines, etc. And we pulled back. We're under the 14. We're not looking great. We're looking a little sickly. There's the 4 hour. Again, not looking great. We tested here from the underside and dumped out. So until we get back over this, unless we get back over 12,190, I suppose, yeah, you'd be preferring shorts. Silver. Oh dear. And again, all the silver people were getting very excited here, almost as excited as they were here and here and here. And I used to think, that silver was going to be my ticket to freedom. That no matter what the pain in here, it was going back to 30, guys, just like in the summer of 2021. And then it was going to 40, and then it was going to 50, and then it was going to who knows, but it turned out to be a load of crap. Thankfully I've given up trying to go long silver, although when I was skint and broke and didn't have any money in my trading accounts, I was calling for silver long around here at the lows. Ha! Bit of fucking irony. As usual, bit of fucking irony. But it's not looking good, is it? Let's be honest. Look, there's the negative crossover. There's the trend line break. There's the rollover under 14s. Distribution at a beautiful exact trend line pivot top. We just gave it a tap here. So people were selling. Whoops, you got tapped out. You know, your stops got triggered and you got knocked out of your short positions. Then kablamo, down we go. Yeah, I mean, very short term. You could say, well, it's coming down to form another shoulder here, and we're nearly there. You know, maybe that would be the optimistic scenario, and this is still the bull flag, or maybe we'll come down to if we're going to go for the whole sort of order block thing. Well, there's the doji, out of which arose the move. So maybe we're going to come down here. Or we're going to make new lows, guys. We're going to make new lows, because between sort of this chopping action here at 16.68 and this high at 15.9, it was an inefficient move, and we'll fill this void, this inefficient move, down here, something like that. I don't know. But what do the internals, what are the breadths, what are the ratios, etc. say? Well, it's not looking good for gold, which is, I guess, you know, silver's big brother. So precious metals, let's say, it's not looking good. Looking at the GDXJ gold ratio, we're under the 14, we're downtrending. Histogram's turning slightly, but I don't know. You'd have to be feeling pretty optimistic to want to take a bias out of that. I mean, you could. Tip shy. Never really. You know, the whole move from 17 up to 24 in silver was just tip shy ratio. It still looked so sickly, and it looked like it wasn't doing its job at all. It wasn't indicating. It wasn't leading and showing. Because that was no small move. That was no small move at all. But it just this thing just looks sickly all the way through. We're under the 14 again. Silver against stocks, taking a pounding. Has been doing ever since this top. Price was going horizontal, the ratio was going declining. Silver against gold, a similar type of gimmick. Under the 14s, rolled over, collapse of momentum. Again, we've got that divergence on the histogram here, so it's possible that it's fallen enough. The yen is still falling, the yen is still collapsing. So in terms of the yen being like an anti-dollar asset, yeah, it's not looking good. So the fact basically that, I mean, oil is an anti-dollar asset. So the fact that it's holding up better than everything else, metals, stocks, all taking a bit more of a pounding relative to the dollar than crude, which may be putting a turn in, along with natty. So that's another reason I'm quite happy to be trying to get long crude. Is it worth looking at Brent? There's Brent. Daily. On a candle to candle basis, you know, Yahoo, that looks great. But of course, I mean, one candle to the next, you can't be hanging your hat on that, because it's completely schizophrenic. Today it looks like a good candle, tomorrow it looks like a bad candle, you know. Japanese stocks, the dollar, ruining the party for everyone. Boo, hiss. Here it is on the daily. No comment. Maybe it'll take these highs here, and then come into this pivot at, what's that, like 105, 9, 106, and then maybe that'll be enough. Maybe then it'll dump out. Agriculturals, yep. We were losing momentum. We've broken the trend line. We had a divergence. And we'll see what happens next. I mean, what more is there to say about that picture? I ought not to waffle on. Semiconductors. Yeah, divergence on the weekly here. Not a whole lot to say. Not a whole lot to say. There's the daily again until we're back above 24. What is that? 150. But I guess you could say, well, maybe we need to be short, you know. And I think that's about covers it. So good night, everybody, and good luck.